up and sit down.
And now, streaming live from the sunny Southern California coast, this is Options Uncensored.
Hey everybody, I'm Steve. Welcome to Options Uncensored. We're making real option trades in real time together. Let's get right into it. First things first, make sure you have your brokerage account open so you can follow along. Have your YouTube video quality set as high as possible. That way you can read the numbers a whole lot easier. Have a calculator on hand so we can do some easy math. If you have everybody, let's go over our open positions. Literally just at the show open, we had our emerging market ETF close, so we'll go over that one in a second. Semiconductor ETF, March expiration, looking for 27. Got some work to do on that one. XBI as well. We rolled this one a couple times, trying to get to 27. We're going to need some more time on that. Morgan Stanley trying to get to 34. Right now 52 on target. Delta's up big today because of United. We'll go over that one. Flat on this position. And XBI Home Builder trying to get to 25. We're on the way there as well. So let's check out this emerging market ETF we sold a short put on. EEM is the stock. On what day? Somewhere back here. Maybe it was on the 17th. I think on the 17th we sold the 35 put. So 35 is way down here. And this is it was for March expiration. So we sold just a short put. This is not a put spread. And we got $16. We opened it at 32 and closed at 16, made $16 here in 4 or 5 trading days. Okay? Not bad. Good news out of China today. That's why everything China and emerging market related is up. Cool. All right, we've got a lot of earnings reports to go to this morning, so let's get started. First one up will be United. Post earnings up almost 7%. So gapped up, moved up a bit. It's already sold off back to where it was at the open. So this volatility is going to come back down today, but let's see if there's any move to make post earnings. Not really. No clear direction here, whether the put side or the call side. So let's see if anything pays more than the other. On the put side, if you sold the 35 and bought 32, or just the 35 on its own. I'm not crazy about United. I do like Delta, though, of all the airlines. It is the cleanest shirt in the laundry basket. 43 minus 17 divided by 2 divided by 300. 4.3 on the put side. On the call side, you'd have to sell 47 and buy 50. 50, or granted 51 minus 21 divided by 2. That's also divided by 300, 5% on the nose. So United, if you wanted to sell the call side, selling the 47. Where's 47 on the chart? 47's up here. It's above the 200-day. And if it continued to move higher, resistance would be around 46 first stop, and then 48.50. So if this continues to move upwards, maybe sell a call spread. If it got around 45.50, 46, okay? We'll hold on this one. Next, GE. A lot of these post-earnings moves are going to be nothing burger, so we'll move through these pretty rapidly. Earnings for today. For GE, flat, so that's not going to be good for trying to open something post-earnings. Open up down's already rallied back. For March expiration, on the put side, if you sold 120 and bought 115, that's 107 minus 56 divided by 2 divided by 500, 5% there. On the call side, I'd skip the call side. The 140 is too close to sell, and the 145 is too far out. You're not going to get paid for it. Moving on. Procter & Gamble, PG, up 5%, not bad. So volatility's come way down, even going into the earnings report. Usually with companies like this, the earnings aren't that big of a market mover. So if you can get a big move, more so than it's priced in, you can. That will increase the price of the option, which means it's more expensive, which means we want to sell it. So a 5% move for Procter isn't bad. Let's take a look. For March on the call side, you'd have to sell 165 and buy 170. The 170 is a little too illiquid to sell, and the 165 it's not worth it. You're gonna get 41 bucks. On the put side, you'd have to sell 145 and buy 140. Same thing. You're just not gonna get paid for it. So let's skip this one. Even though good move on Procter. Verizon VZ. What's nice about all these big names is they're very liquid. So it's easy to get in and out of these trades. Up 5% for Verizon. On the chart, selling the call side is interesting here. If it breaks above here, the next resistance at 43.77. So let's see what. On the call side, you'd have to sell 45, so that's past 43.77. The problem is, if you want to sell the 45, what do you buy? You'd have to buy the 46. You're going to receive a $10 credit, 5% on the nose. If you have a very, very, very small account, you could sell the 45 and buy the 46. It's a $100 spread, trying to get $5. On the put side, you'd have to sell 39 and buy 11, or just 39 straight out. 39 is right down here. That seems very fairly priced for a post-earnings move. I'd skip Verizon. Next, we've got 3M. I think they're down big, yeah? Yeah, down 9%. Their earnings were so-so. It wasn't that bad. I wouldn't be surprised if you got some downgrades tomorrow or the next day. So if you did want to do something on the put side, you may want to hold off till those downgrades come. Support right here, around 96.50, 97. Next support is between 95 and 94, and if it moves past that, next support for sure is at 91-ish. Okay, so I want to keep 3M on the list to check back later this week and wait for those downgrades to come, because they're going to come. And if those downgrades can gap down, say around 95 or so, we'll sell the put side. Yeah, and then on the put side, the 90 is a little too close, and the 85 is too far out to sell. I wouldn't mind just selling the put straight out. Interesting. We'll keep an eye on this one tomorrow and the next day. Hopefully, we'll have some downgrades that move it down even farther. Next, D.R. Horton, DHI, Home Builder. We are short the Home Builder ETF, the XHB. It's up today. Or my position is up today. The XHB is probably down because of D.R. Horton reporting. Earnings were today down 9% or so, 8.5%. And this is the reason why I'm short the Home Builder ETF. They've had this big move up, all-time highs for the Home Builder. We've got to have some pullback here. As far as D.R. Horton goes, same thing. This has got some room to fall still. We'll get good support around 131, 132. So what I'll do is also put this one on the list, wait for more sell-off to come, and then we'll sell the put side if there's some downgrades within the next couple days. Not great liquidity, actually. We're going to skip this one. We're not going to follow up just because liquidity issues. It's too liquid. 20-cent spread here at the 130 call side. 15-cent spread here and very low volume. Okay, moving on. Next, J&J down 2% today. Post earnings. Very low volatility for Johnson & Johnson. This will probably be a nothing burger as well. Put side, if you sold, you'd have to sell 150. And that's awfully close. $150's down here. Remember, this is March expiration, so we've got a lot of time till March. Probably skip this one. Next, let's look at Lockheed Martin, LMT. Earnings today before the open. Not a lot going on this one. So like I said, when we have post-earnings moves, we're looking for something that's the move after the report is bigger than what's priced into the options pricing. And this is not going to be one of them. Let's quickly check out here. Yeah, hardly any volatility. Let's look at Raytheon then, RTX. Up almost 9%. Same thing post-earnings. This one may be a candidate. So earnings this morning, obviously good news, or at least good reaction to the news. As far as resistance goes, we're catching it right around here. So this low back in May of 23 is a ceiling. If not, we've got a couple. We've got 93, 93.50, and then another big ceiling at 95-ish. So if we want to sell the call side here, we got to move past 95. For March, you'd have to sell the 100, which is fine. The problem is this. I don't sell short calls on their own naked. I have to do call spreads. And there's nothing to buy on the 105 down to the 125. So there's the bids of 0 and the ask is 73. No volume here. So it's going to make it really hard to get this trade even opened, let alone rolling it or closing it if it goes against us. Because liquidity is important. And me personally, I don't sell short calls naked. Okay? Put side, skip the put side, it's not worth it. Close on this one, really close. Had there been something to buy at the 105, I would have opened this one. Next. Halliburton, HAL. Up 3%. This is post earnings as well. Not showing here IV rank of 3%. This blue line's down here. Probably nothing to do on this one. Yeah. Just judging by the chart, want to sell the call side, maybe. It's not going to be worth it. We'll skip this one. Okay. Next, we'll look at maybe TKO. Greg asks, can you explain option prices before and after earnings? I'm confused about trades before and after the news comes out. Thank you. So the pricing. Okay, so let's go back. Let's pick Johnson & Johnson then. And look at the pricing. So we're trying to open all new positions for March expiration, but if you look at, well, it's going to be smaller today, but if you look at the expiration for January today, since the move was so small, we've got reds on both sides. The call side is red, which means they lost money, and the put side, they lost money as well. So before you go into earnings, these prices are quote-unquote expensive just because there's going to be movement after the earnings report comes out, both positive and negative. So judging by previous earnings reports, The pricing models will price in the anticipated volatility, and you can actually price in the anticipated move of what the options market is pricing in. So for example, say Johnson & Johnson was pricing in a 4% move after earnings, and it only moves 2%. Well, then these prices on both sides are going to be lower the next day because it was pricing in a 4% move and it only moved 2%. So then both sides lose, and the option sellers that opened previous days win, whether you sell the call side or the put side. Okay, so that's how the option pricing happens before, and then what happens afterwards. It's a volatility crush. So anticipated volatility is heightened before the report, and after the news comes in, if it doesn't move far enough, both sides lose and the option seller wins. What you can do is, say Johnson & Johnson moved 12%. It only priced in 4%, but it moved 12%. So now say it moved down 12%. If these puts were only pricing in a 4% move and it moved down 12%, the puts are now more expensive than before the report just because of the big move. So even though the volatility is gone, there is a big move to the downside. And then what we would do is look at our March expiration on the put side and sell something on the put side just because the move was so big, it wasn't priced into any of these, okay? So there's a math formula you can do to figure out just looking at the straddle price of the closest till expiration. So yesterday, what you would have want to have done is check the straddle price of Johnson & Johnson for the January 26th expiration. And there's a quick formula you can do. It will give you the anticipated move that's priced into the options market. There's also another more complicated formula that you could do, but there's a shortcut way. I forget what the exact formula is, and there's also websites you can do that will show you what the anticipated move is. So you don't have to do the math at all if you don't want to. Just go to Google and type in earnings report calendar, something like that, and usually they'll collect all the data for you and tell you what the anticipated moves is. You can look at all the historical moves as well, up and down percentage wise. You can look at revenues and all that stuff. But so Greg, when we look at the trades before and after, rarely will we open a trade before earnings. We did one a couple weeks ago with JP Morgan, but that was a special event just because everything lined up perfectly. But like I said, after the news comes out, that's when I like to open positions, and when there's a bigger move that was priced in. Okay, so Greg, great question. Thank you for asking. I hope that helps. Again, earnings are fun. You can make the trades before the report. Just there's a lot of things that have to make sense in order to do it. Okay. Back to TKO. This is up 18% today, so this is the WW, I don't know what it's called now, but it was called WWF when I was younger. They are working with Netflix and another company, and they also brought The Rock on as board of directors, so they're up big today. Volatility's okay. It'll probably spiked up today afterwards. Here's the chart. So gapped up's already selling off a lot. Let's see on the call side. You'd have to sell 105, 20 cent spread here and 20 cent spread here. That'd be a 40 cent spread on the entire position. That's way too liquid to get filled. Put side, same thing. Actually even worse on the put side. So we'll skip this one. Close but no cigar. When are earnings for them? March. Cool. Okay, next. DWAC, Digital World Acquisition something. We've looked at this one the past couple days. This is the Donald Trump's company. What is it called? His online platform. I forget what it's called. But big news, I don't know what it is. Doesn't matter what the news is. All we know is option prices are very expensive right now. It says IV rank here on E-Trade is 213. Current IV is 234%. And IV changes up 151%. So what does that mean for us? It means option prices are very expensive. When are earnings and what is liquidity like? Earnings, we don't know. And Get rid of this January expiration. Looking at March, is there liquidity? Kinda. You have to go all the way out to the 15. There's a 38-cent spread here on the 15, so we're going to skip the put side. We want to sell the call side anyways. You'd have to sell the 85 and buy the 90. Very illiquid. You got a 35 cents. No, well, God. You got a $2 and so spread here. If this was more liquid, this trade would make a lot of sense. But it's not, so we're going to have to move on. Next up, this one hurts. FXI. So yesterday we tried to sell the short put. Let me go back to the chart for yesterday. Man, this one sucks. So yesterday, right here at the bottom, we tried to sell a short put. Not a put spread, just the short put. It didn't get filled. And overnight, China released some news that they're going to pump a bunch of free money into their markets, and that will boost all stock prices. So it's up 4% today. If any of the viewers out there got filled yesterday, congratulations. You're probably already out of it. Great trade. I unfortunately did not get filled. That one hurts because that was right on the nose, perfectly timed. And the other bad news is the move is already made. So don't open the put side today, and you'd have to wait for a big move up, say to around 25 to sell the call side. So I identified a good trade, and hopefully some viewers were able to capitalize on it. I was not one of them. Baidu. So all these Chinese stocks like Baidu, JD, Alibaba, the K-Web, all of these are going to be up big today. Let's see if there's anything that makes sense to sell. Let's start with Baidu. Up 7.5%. Could catch resistance around 109. Okay, look at that. Between 109 and 115. So selling the call side. Just back and forth on these now. Call side, if you sell 125 and buy 130, or you can go farther out here. 125. Liquidity's okay. It's not the best. If you wanted to go farther out to get better liquidity and sacrifice the percentage of what you're going to make, you can do that. Let's hold on these. Let's wait for a bigger move up. Baba, up 8%. Earnings are on the 22nd, so exactly a month away. Got this downward channel. Resistance at 77.77. Also, now we'll say resistance at 77.77. So if we want to sell the put side, let's wait between 77 and the 200-day, which is around 85. So, like I said, we missed the short side on all these Chinese stocks. Almost got filled yesterday, but it didn't, so we're going to have to wait now. Moving on, let's check in on some of our follow-ups from yesterday. Gilead, G-I-L-D. What were we waiting for? So it looks like it's got its bounce from the 200-day yesterday. Support here. Earnings, I think, are what, a month away? The 6th, no. All right, we're going to take Gilead off the list just because we're too close to earnings at this point. Wayfair, W. Follow-up from last week. Earnings are the 22nd, so this one's exactly a month away. What were we waiting for on Wayfair? Volatility is down here. Oh, that's right. So we have the descending trend line here, and ascending trend line here. So as this gets closer, both ascending and descending, we'll have a breakout either to the upside or the downside. So say we have a breakout to the upside, maybe sell a put and get in on that action. If we have a break to the downside, maybe sell a call spread. Kind of early to tell on this one. Looks like we have a good bottom forming, so if anything, sell the puts on this one. For March on the put side, you'd have to sell 40, and these are actually expensive. You can pay 99 bucks to sell the 40. This is going to start pricing in earnings volatility. So you see this hump here. This is all earnings premium being priced in. So that's why these are expensive. Okay? Like if you sell the February contract, this is before earnings happen, so these are going to be cheaper. We want to sell things that are expensive. We don't want to sell things that are cheap. Where's 40 on the chart? 40's right here. So this is very fairly priced. This is the 40. We've got March expiration, which is what, 50 some days away. And we also have earnings involved too. So there could be a big move after earnings. So I think 40, this is fairly priced. There's no deal to be made here. Next, Celsius, CELH. Maybe it won't hit the 200-day. Earnings are the 28th. Got a little more than a month here. Looking at the put side. Selling 40. These are not as expensive as Wayfair. Good liquidity on the 40. 35 not so much. So if you're comfortable with just selling the put on this one, sell the 40. I don't know if I'd want to do that. No. 40. If it breaks below here, next support is at 45 and then 40. Take Celsius off the list. We'll follow up. Next up, DraftKings. I don't know why we keep checking on this one. DKNG. We're waiting for 42. It's not there yet. That's right. We've got this big move up. Waiting for the next move higher to sell the call spread. Earnings for DraftKings are the 15th. We're less than a month away. Again, I'm going to have to take this one off the list just because at this point we're too close to earnings and volatility is too low. Cool. Good day so far. All of our positions are green. Morgan Stanley's coming back. Delta's coming back. Home Builder ETF's coming back. All right, let's go to our IV rank scanner and we'll sort by volume. Don't forget, a lot of earnings are coming up, so we got to be careful of that. Tesla on the 24th. The Russell losing steam here. I think yesterday was what, 50-something%? Now it's 41%. Baba we already looked at. Earnings for AMD. NVIDIA is on the 21st. We looked at AMD yesterday. I remember a viewer asked about NVIDIA. Kind of in no man's land right now, so hold on that one. Apple on the 1st. FXI. Man, that one sucks. Spirit. We looked at it when they had their issues on the put side. We should have sold the put side. Too chicken to do it. Would have made our money. Whoops. So now at this point, since Spirit is rallying back, but we know they're going to go bankrupt, we got to wait for it to get up to, well, look, we do have some resistance here at $9. But the next stop for resistance then is maybe 10 from back here in March of 2020. If not, we've got to go all the way up to 14. Call side for March, you'd have to sell 15. That makes perfect sense. If you sold 15 and bought 20, let's do the math. 67 minus 34 divided by 2 divided by 500, only 3%. Boo. If you sold the 15 and bought the 17.5, 70 minus 48 divided by 2 divided by 250, that's only 4%. We're not getting paid to take the risk, so we'll skip this. This one, the 15 strike, is very expensive, but selling naked calls is not my cup of tea. Put side, you'd have to go all the way out and sell the 5 and buy the 2.5. What do you get? A lot of volume here on the put side. 57 minus 12 divided by 2 divided by 250, that's 9%. Where's 5 on the chart? I don't know if I'd want to sell the put side though. You're taking the risk. 5 is down here. Can it get back down there? Most certainly. I think JetBlue is trying to appeal, but if that appeal gets overruled, then this thing is going to come down to 0. Okay, Spirit, go bankrupt. No loss there, right? Next. Oh, sorry. So knowing that information, if Spirit will eventually go bankrupt, sell the put spread. I wouldn't sell the put straight out, just because if they do go to 0 and you sold the 5, you get assigned all the shares. Okay, but we'll see. A lot can happen in 53 days. KWeb. So that is the China Internet ETF that includes Alibaba, JD, Baidu, all those. Let's check out the KWeb. I traded it before. Here's our chart. Missed it. We missed selling the put side. Would have wanted to do it yesterday. The call side, we're not there yet. We have to sell the call side around. Actually, it is hitting resistance from back here in May of 23. If it moves past there, next resistance is at right here, 25-ish, 25. So if we do want to sell the call side, let's wait till to get to 25. If not, a lot more. We're back here around 26.50. But we're too early to sell the call side, and we already missed the put side. American has earnings on the 25th. PayPal on the 7th. United we already looked at. Amazon is flat today. They've got earnings on the 1st. So does Meta. Netflix is today after the close. Good. Palantir on the 5th. Baidu, we already looked at Baidu. Microsoft and JetBlue on the 30th. Disney on the 7th. JD, did we look at JD yet? Let's look at JD. Support is way back in 2018. Again, like the other ones, we missed the bottom yesterday. Too early to sell the call side. Coinbase has really come in. It's only 33% now, Ivy rank. Digital World acquisition we already looked at. AT&T on the 24th, that's tomorrow morning. Actually, maybe we could sell the call side going into AT&T. No. You'd have to sell 19. You're not going to get paid for it. Next. Intel on the 25th. Ford on the 6th. Google, the emerging market ETF. We closed today. Still has some high IV. Let's take a look. EEM. Maybe too early to get back in. So we sold the put on the emerging market ETF. Still does have some volatility here. I don't know. I don't want to sell the put side yet. Sell the call side around 39. But too early to get back in. We made our trade. We made our money. Let's hold. Chewy. When is their earnings? Sorry, when are their earnings? My English is no good today. Earnings are March the 20th. No news. Volatility's come in a bit, so maybe no on Chewy. Put side, if you sold the 15. Call side, call skew on this one. So if you sold the 25 and bought the 27.5, what do you get? 35 minus 15. Divided by 2, divided by 250, 4% there. That's no good. Next. Rumble. And phase on the 6th. Boeing on the 31st. Pfizer on the 30th. Google on the 30th. Firm on the 8th. Robinhood. ADM. We looked at that one yesterday. Bounce today. I don't think there's been any development, though, on the story. CFO on leave before end of February. So we just got to wait for the news to happen on this one. Have there been any upgrades or downgrades? Goldman Sachs maintains a neutral, lowers price target to 67. Okay. Here are the lawsuits coming from the shareholders. That's no good. Couple of them. Oh, this has got more room to fall. All right, so for this one, wait for more downgrades. Wait for the earnings report on the 25th. So actually, we should get some more clarification and news during the conference call. So let's see what they have to say. Say theoretically that Archer Daniels is down big after earnings. Let's see what they say, and then go ahead and sell the put side. I bet you it's expensive going in. So back to Greg Proops' question. See how this is all heightened as you get closer and closer towards earnings. So these would be the most expensive. Let's take a look at the January 26th expiration. Not very liquid, so it's harder to do this one, but post volatility, this line is going to come back down to the average, and all the earnings premium on these option prices will be sucked out. But if we look at March, you'd have to go all the way out and sell the 45. A lot of volume here. And for this stock, this is a lot of volume. Call side. A lot of volume at the 60 strike, which makes sense. We got a lot of buyers here. So if you sold the 60 and bought the 62.5, these are expensive, relatively. Let's move on to a liquid. Upstart on the 13th. DraftKings we already looked at, waiting for, what was it, 42? The ARC ETF's at 100. Oh, sorry, never mind. That's Fisker. Skip Fisker. Roblox on the 7th. Cleveland Cliffs on the 29th. Alcoa. Oh, all the commodities are up because of the Chinese news as well. Let's check out Alcoa. AA. Their earnings are April 17th. Great. Volatility has come down a bit, so you would have wanted to sell the put side a couple days ago. Yeah, no movement after earnings. If anything, you may want to sell the call side now. Good liquidity here. March, you'd want to sell the 35 and buy the 40. 35 is a little close for comfort, but let's do the math. 35. 65 minus 21. Divided by 2, divided by, what is it, 500? 4%. Not worth it. Put side, you'd have to sell 22.5. What's the dividend on this one? 1.5. Okay. We'll skip this one. Skip gold for now. Eli Lilly on the 6th. CCJ up 4%. That has to do with the Chinese news. Earnings are on the 8th of February. Too close. Next page. Not a lot going on here today. Roku. Let's take a look at Roku. We traded Roku back in December and January. Earnings are on Valentine's Day. Very low volatility historically. Got the bounce here from the support back at 84. But we do have this downward trend line, so the call side could make sense as well. This one's in no man's land. Moving on. Block on the 22nd. Shopify. Earnings got to be coming up. Western Digital on the 25th. Oxy on the 14th. Chevron on the 2nd. Too small. Freeport is at 20. TKO, we already looked at that one. Charge Point's too small. Southwest on the 25th. Snapchat on the 6th. XLV, we traded that one. Let's take a look at XLV. Maybe there's another move to make again. Well, I don't remember the trade. What did we do? Did we sell the call side? Yeah. We sold the call side somewhere over here. Moved down. Made our money. Where are we at now? I don't know, man. I don't know if I'd want to sell the call side. You definitely don't want to sell the put side. Put side has support around 137, right back here, from July of 23. Hold on this one. Starbucks on the 30th. Sunrun on the 21st. That's a month away. Let's take a look. RUN. Earnings, yes, are on the 21st, but got a good bounce here. Looks like it hit the support from back in October of 23 and bounced up. So we missed that one. Good liquidity here. On the put side, if you sold 9 and bought 8, what if you sold 10 and bought 8? 41 minus 15 divided by 2 divided by 200, 6.5%. Is that right? To be fair, the 10 is a little close for comfort. That one's interesting. Call side, if you sold 19 and bought 21. 48 minus 29 divided by 2 divided by 200. That's 4.7. So we got some put skew here. Sell 10, buy 8. Where's 10 on the chart? 10 is down here. That's actually closer than I thought it'd be. And earnings are somewhere over here. So we have to deal with earnings as well. I don't want to play that game. Next. Sim, rig, Jets, Boyle. Trade Desk. Someone asked about Trade Desk a couple weeks ago. Let's take a look. TTD. Earnings are February 14th. They appointed a chief strategy officer. Okay, good for them. Call side. Got the 200-day coming up. Put side, if you sold, well, actually these are expensive. If you sold 55 and bought 47.5, that's $750 spread. Actually, don't sell the 47.5, it's too illiquid. The 50 has better liquidity, 3 cents spread here. So take a look, this is a good lesson in liquidity. The 50 strike has a 3 cent spread, but the 47.5 spread has a, 17 cent spread? So that's a big difference. So if you sold 55 and bought 50, what do you get? 99 minus 49 divided by 2 divided by 500, 5% on the nose there. That seems fair. Call side. 85's too close. And the 90's too far out. If you sold 90 and bought 95, 126 minus 77 divided by 2 divided by 500, 5% there too. Not worth it. Avago's too big. USO, oil's got some volatility. This could be higher though. Uber, Blackstone has earnings the 25th. Let's take a look at USO and XOP. Shenanigans with the Houthis has kind of died down. Not great volatility here anymore. Remember we saw the put spread a little bit back. Made our money. When did we sell the put spread? Somewhere around here? No, actually we sold the put, not the put spread. Somewhere back here. I think it was December. Hitting the 200-day. That's interesting. We do have resistance from back here in August at the 70.50. Hit that yesterday. You can make the argument for selling the call side. You'd have to sell 79 and buy 85. What do you get? 85 minus 34 divided by 2 divided by 600, 4.2%. Not good. On the put side, if you sold 61, not very expensive. Let's look at XOP. Put side on XOP looks interesting. Looks like it's getting some ground here with a small move up as possible, but very low volatility. This blue line's way down here. E-Trade gives us an IV rank of 0, so that means these are not expensive. On the put side, if you sold 116, you get paid 109. This seems very fairly priced. There's no deal to be made here. If you sold 116 and bought 111, what do you get? 109 minus 59 divided by 2 divided by 500, 5% there. This is all very fairly priced. 116 on the chart. 116 is down here. That's all fair. I think, you know what, that'll do it for today. So we're not going to try to open any positions today. Everything's in the green, so far so good today. Delta's really come back a lot, so is Morgan Stanley. Morgan Stanley, yeah, trying to get to 34. XHB, Delta trying to get to 16. Everything's looking good today. We had our emerging market short put fill today, so we made 16 bucks there. Good job, me. Greg Proops, thank you for the great question about earnings. Earnings are a lot of fun. You know, it's a lot of our bread and butter trades, especially if they're really, really, really big moves that are obvious. So, Greg, great question. Thank you for asking. That'll do it for today. Thanks so much for watching. Tune in every morning at 7:15 a.m. on the West Coast and 10:15 a.m. on the East Coast. We go live every morning trading options. Also, tell your friends who are trading as well to tune in, like, subscribe, all that good stuff. All right? We'll all trade options together. See you tomorrow. Enjoy your Tuesday.